Hi, this is Mike Maloney, and I've got Jeff Clark with me. Jeff, how are you doing?
I'm doing great, Mike. It's great to be back with you this week again, of course. And we've got lots to talk about this week, but we have a surprise for everyone. We brought on our president of goldsilver.com, Alex Daly. So, Alex, thanks for joining us. And I understand we have a couple exciting announcements to make here. But before you make those announcements, can you give us an update on the status of the bullion industry and bullion availability and all that?
Yeah, sure, Jeff. And thanks for having me on. Always great to be on. Thanks, Mike, too. Yeah, it's an interesting bullion market, right? I think everybody's relatively aware that ever since COVID hit, there's been an increase in demand for bullion, in particular silver and gold, right? We've seen prices go up. We've seen demand go up pretty consistently from this time last year. What's really interesting is since January, I think everybody's heard about the Reddit silver squeeze and stuff. We've really seen an increase in demand for physical silver, and it's driven up premiums in the silver market pretty significantly. Anybody who's gone and shopped around for, say, a silver eagle or a silver maple leaf has probably seen the increase in those spreads. I say premiums just because the spot price has not been affected nearly as much. Right? I think what we're seeing here is an interesting phenomenon in the silver market where sustained demand over the course of a year and an increase in and a decrease in the supply from the mints, right? We've seen the Royal Canadian Mint, the US Mint, a lot of the private mints having trouble staffing fully, getting out their normal allocations. That those two things have combined to sort of drive up premiums in the silver market, but not drive up wholesale costs. So 3 months ago, a Silver Eagles premium in the wholesale market was about a quarter of what it is today. It's up 4x over the course of about 3 months. Now, that said, if you are trying to buy, say, 1,000-ounce bar from COMEX or just on the wholesale market directly for spot delivery, it's the same price it was 3 months ago, right? What we're seeing is sort of a disconnect between physical silver and spot silver. And that at some point is going to have to shake out, right? Either spot prices are going to come up to follow as these mints try to buy more capacity, try to buy more silver on the market, or premiums are going to decrease. As a result, we are, as you said, Jeff, trying to put in some interesting new products into our product mix to help people, get better prices on silver than what they're seeing in the market today. While I'm sure it is great for somebody to take, say, 2-day delivery on a silver coin that's available, I don't think anybody wants to do that at a 50% premium over spot, right? With wholesale silver, with 1,000-ounce bars much, much cheaper, the first product that we're announcing right now is that we're actually going to bring the ability for people on goldsilver.com to buy industrial weight silver in individual ounce increments. You'll actually be able to purchase fractional ownership of silver bars, COMEX bars, stored in a vault with gold silver. We call it InstaVault silver. We also have InstaVault gold. Silver is available in 1-ounce increments. Gold's available in 1/100th of an ounce increments. And when you purchase these products, you have instant availability in our vault. That means you're getting today's price. You're benefiting from what is a low spot price compared to premium physical silver today. You're getting it available for instant liquidity. So if you buy now and your credit card is settled or your payment is settled and it's in your vault, you can then sell immediately, right? So an hour later, if the silver price hops $3 because there's another big movement in the market or scary economic news and you want to take a little bit of profits off the table or you want to purchase more, you can buy more instantly, you can sell more instantly. And the great part is this is real physical silver you own, so you can also take delivery anytime you want. So with InstaVault Silver, you can purchase now at much, much lower premiums, benefiting from the price of these 1,000-ounce bars. And then you can take delivery anytime you want, today or 6 months from now or 6 years from now, when premiums have changed, right? If you get to a point where, say, Silver Eagle prices drop much closer and you want to take delivery for just the cost of the spread between those two products on the ask side and a simple insurance and delivery fee, you can actually take delivery. We're also going to be introducing some other large format silver for direct delivery purchase. So we have made a purchase of a pretty significant quantity of kilo silver bars, which are really becoming the new standard in fixed weight bars out there. I think you're seeing them take over for 100-ounce bars. They're a great price point, just below $1,000 at today's silver spot price. And we can get them, frankly, at much lower premiums than where we're seeing kilos today on the market. So we've made a pretty significant purchase of kilos for delivery out of a mint from Hong Kong. They're coming to us at the end of April, and we're going to be making them available for pre-order this week. So between InstaVault Silver and the new Silver Kilo products, which are going to be from Heraeus, one of the best known mints in the industry, I think we have a great set of options for people to buy much lower cost, much lower premium silver on today's sort of softer spot prices. I think it's a really great product out there, and it'll really help consumers get a better selection of silver for their dollar.
That's very exciting, Alex. I can't wait to see those products. That's very good. Mike, so do you have some questions for Alex too?
Well, I'm just so glad that we've done this, because I just did not feel, I don't feel comfortable selling anybody a product where it's 50% over the spot price. Buying something now where you've got real silver, not a paper exposure to silver, but you've got real silver in a vault, and waiting for the spreads to come back down. Right now, for every silver eagle that you buy, you can get 1.5 ounces of this silver, basically. And then you can wait for those spreads to come back down. And it might take 1.1 ounces or 1.2 ounces instead of 1.5 to convert that into silver eagles in the future once the spreads relax again. And, demand is always going up and down and up and down. Supply is rather constant. So these spreads are the supply demand. They're setting the balance between supply and demand. And they're unavoidable. And the only thing that you can do is come up with the best plan to get around them. And this is that plan. So I'm so glad that we've done this. So Alex, how does everybody find out about this? It's not on the website yet. I mean, do they have to sign up for the newsletter to get the information when this comes out? And the other question I've got is, does this qualify them for the Insiders program?
Yeah, absolutely, Mike. The best way to find out about any of our deals, sales, new products, promotions is to join the email list. We always let those folks know first what's new on the site, give them the first crack at, say, limited inventory, like those Heraeus Kilo bars. We'll only have so many of those coming, and new products like InstaVault. And yeah, every purchase on goldsilver.com qualifies for insider status, whether that is the new InstaVault Silver or Heraeus bars, Eagles, Maples, everything we sell counts towards insider status.
Great. So, Jeff, what else have you got for us today?
Well, I just wanted to point out, I jumped on our website this morning before this call. And Alex, I see that we have a lot more products available now. Silver maple leafs are back, the Philharmonic, the 100-ounce silver bar. We have gold eagles back in stock, gold buffaloes, the Krugerrand, the kangaroo, the Philharmonic, the gold maple leaf is back. So, Alex, this is great to see all these products that are back and available for purchase now. How would you describe the industry right now? What's the status of the bullion market right now with availability and also premiums? Are premiums coming down too?
Yeah, the bullion market is definitely catching its breath a little bit, right? I think the peak started around January 30th with the Reddit silver squeeze that frankly brought in enough business that we had to close down our store for the first time in years. I think it's been more than 10 years at this point that we've actually had to shut down and say, we can't take any more orders right now. And that's because we sold through, weeks worth of future allocations of deliveries, right? Gold Silver maintains some inventory of its own. We also sell on allocation, just like every other dealer in this industry does. And when we get out to a few weeks out, we start to get uncomfortable selling to people, right? We want to have people get rapid delivery. And then right on top of that, we saw the Dallas winter storms. A huge amount of the distribution network that we rely on, whether that's FedEx or UPS or the U.S. Postal Service, runs through Texas, Tennessee, that area of the country that was hit really, really hard. FedEx has been talking about delays in its infrastructure pretty publicly. You can go search on the Wall Street Journal and Bloomberg and see where they have 2, 3, 4 week delays at the Tennessee sorting facilities. So we got really uncomfortable sending packages through to have them sit in a warehouse in Tennessee and not get delivered to our customers, right? We have insurance policies to worry about. We're not selling sweaters, we're selling money. It's a very different business. So we try to be conservative about what we offer for sale, only things that can be delivered within a few weeks' time. And what we're seeing right now is the wholesale deliveries to our warehouses are speeding up a little bit, right? We're seeing more metal come out of Texas, where there's a couple of very large wholesalers. We're seeing more make it through the FedEx hubs in Tennessee and UPS hubs around the country that have been very backed up. And so we're able to put more up for sale because delivery timelines are tightening. Spreads have been a little slower to fall than delivery timelines. So I think you'll find, especially on the silver side, that the Eagles and Maples are a little more expensive relative to the spot price than they have been in the past. As I said, that has a tendency to sort of rubber band back, right? Either those premiums fall or the spot price rises to catch up. One of the two has to happen, right? They can't stay disconnected for long periods of time. But because the spot price is based on futures markets and industrial demand that doesn't move up and down quite as quickly as consumer demand does, it takes a little bit of time for that to happen. So definitely catching up, Jeff. I think what we'll see over the coming weeks is probably a slight softening of spreads, but a definite decrease in delivery timelines. But right now, demand just remains much, much higher than it was a year ago, right before the COVID pandemic, right? We're coming up on the anniversary of the lockdowns and this surge in demand. The U.S. Mint still shows no real taste for increasing allocations in any significant way. Canada is still way off what it was in 2019 and early 2020 delivery volumes. So I think these premiums are here to stick around for a little while, but I definitely see delivery timelines tightening.
That's great to hear. So very good. And silver is up this morning. If you don't know, we're almost back to 26. So still within a very reasonable buying range as far as Mike and I are concerned. So, okay, great. Well, let's switch gears real quick and talk about an article of the day we have here. And it's an article I wrote on one of our most popular articles that's ever been on our website. And that is, how much gold and silver does it take to buy a home or a vacation home? And you can see this chart here, how many ounces of gold it takes to buy the average priced home in the US. Now, I'll point out that Mike and I had a discussion here after this article came out about the sources used. And you'll see I used the Fred data for average home prices. And then you can see how many ounces of gold it has taken there historically and currently. But if you use the US Census Bureau data that Mike pointed out to me, the average price home is actually lower than what the Fred source reports. These two different government sources actually have different data on the average price of a home. But if you do use the US Census Bureau data going back to 1980, at the peak of the market, it only took, and if you scroll down to the silver ratio there, it took actually less than 1,000 ounces of silver coins to buy the average priced home in the US. It actually took 944 at the peak of the market if you use US Census Bureau data. So, Mike, thanks for pointing that out to me.
Yeah, that was the US Census Bureau data, but the guy that made the charts was using monthly average for the gold and silver price. If you actually use if you were able to catch the peaks, you're talking about 890 ounces of silver for a single family median price home, and you're talking about only 50 ounces of gold. And so it's actually, I mean, the scenario here is pretty spectacular because, you know, if you look at it, we're at 15,000 ounce price right now for a home of silver eagles or silver ounces, I mean. And if it gets back down to that where silver was at its 1980 high, 1,464 is what's in the chart. Well, that means if you sold a home today and you put the proceeds into silver, and if these ratios do get back to where they were, you're going to be able to buy more than 10 homes that are similar to the home that you sold. And when you go to that 890 ounce price, the winnings get even more spectacular. But it's a great article. I suggest that everybody reads it because it gives them the idea of pricing things not in currency, but in real money. And there's a big difference because Real money will maintain its purchasing power throughout the centuries. Fake money, fiat currency that's debt-based, cannot. It's by its very design.
Yes, very good. Alex, what do you think? Buy a beachside condo someday with 3 mint cases of Silver Eagles or Maple Leafs?
That sounds good to me. I will add a wrinkle to what you guys are saying that it's sort of, even more in favor. One of the issues with average home price data, median home price data is probably the right word to use, is that median homes have gotten bigger, right? So one of the factors in median home price increasing is obviously the inflation of the currency, the devaluation of the dollar, right? Another factor, really cheap rates right now, right? So home prices relative to, say, average incomes are as high as they have ever been right now. And that's something that'll have to come back down. And that median home size has gotten significantly larger. So when you go back, 40, 50, especially 70 years and make that comparison, it's probably worth, Jeff, crunching the numbers and seeing what that looks like in terms of how many square feet of house a silver coin buys. I bet that number turns out a lot better, to be frank. Because at this point, right, we're up to like 1,400 plus square feet from what used to be 1,100 on those median home price measures.
Yeah, that's a good point, right? Homes are much bigger, so very good. That'll be an exciting thing. We can all do that someday. Well, on to tweet of the day here, and this is a chart that is from Chase Andrews, and he shows here that gold is holding on to its 61.8% Fibonacci retracement. So, Mike, you've talked about Fibonacci trends and things like that before in the past. This chart shows that gold has retraced 61.8%, which is a major Fibonacci level. So, Mike, what do you think? Is this maybe the bottom for gold, or how do you interpret this chart?
Yeah, this is an amazing chart, but what's even more amazing is the resilience that silver has shown during this pullback in gold. Now, if gold does break this Fibonacci support, I would expect that it would pull silver through its support zone and that we would see a further pullback. But this could very well be the bottom in gold, and gold and silver may start rising again from here. So I'm set with certain targets, and I've got a little bit of extra cash on the side so that I can make some purchases during this pullback. Most people chase price, and what you want to do is buy when the price is down, not when it's up. And we see this with our sales. When the price is soaring, that's when we have the most sales. But when the price falls, when people should be buying, they stop. And so I'm trying to do the opposite. I've got cash set aside right now, waiting for the signal that this is the bottom and a reversal has come.
Yeah, very good. Alex, what do you think? A good buying opportunity here maybe for gold and silver?
I'm not much of a technical analyst, Jeff, but I am with Mike that it's a good time to own gold and silver from a macro perspective, and a good time to have some cash on the side for sales, right? We've never seen a stock market quite at these levels. We've never seen, a currency stimulus quite at this level. I think there's just a great setup to be cash heavy right now, especially if we see what Mike has long predicted, which is deflation, which they will fight tooth and nail, followed by large inflation. That's the time you want cash on hand. And so I think, whether it's short term or mid-term thinking here, whether you're buying next week on a dip or buying, like a lot of people piled into silver when it was, approaching $15 levels last year, have seen a great return on their money. I think this is, good time to be in cash alongside of your metals. But don't forget, your metals can be used as cash too, right? They're highly liquid, available for sale anytime. That's one of the reasons to keep them in storage. It's one of the reasons to use something like InstaVault. I'm sorry for the shameless plug, but it's a good time to keep your metals very, very liquid, because there's going to be something you want to buy when real estate comes back down, as rates go up, which they're already starting to do. Mortgages back over 3%, 10-year treasury yields are up. We're already starting to see what looks like the beginnings of some form of deflation, and they're going to fight it tooth or nail. We're going to get that $15 minimum wage, and we're going to keep getting currency airdrops. And so it's going to be really interesting a couple of months and years ahead of us.
Yes, very good.
It has been very weird with the, some things inflating and other things, for a while we were seeing oil in negative territory. And so, it's trying to figure out, are we going straight into inflation, or is there going to be that deflationary dip first? It's very difficult. I've just never seen any example in history where a society that's all on one side of the boat, where the boat rights itself, it usually capsizes. Right now, the entire population, I mean, most of the population is out on credit. We use a lot of leverage. And so for the big players to win, the people that run the game, is for a deflationary dip first, so that some of the assets are foreclosed on, and then inflation after that. But going straight into inflation rewards the public for mass stupidity, for going out on credit cards and just mortgaging everything, where the bank owns their life, not themselves.
Right. Good point, Mike. I like that. Well, on to reader feedback here. And this is from Braden Statters. Braden, I don't know if I'm saying your name right. I've been stacking for years, but honestly, I'm starting to have my doubts. The market is so manipulated. Will we ever have our day? What if it really is different this time? What if the reset takes us fully digital with no cash? Why couldn't they just keep the manipulation going? I want to be wrong. So, Mike, how do you respond to someone who's kind of frustrated that the manipulation he believes is the reason for holding the price down right now? Is it going to break?
I've got two responses. One is, I'm grateful for the manipulation, because that's the only reason you can buy silver at a much lower price. Gold and silver, both are manipulated enough to where the price is suppressed and you can buy them at a much lower price than they really should be. If gold was 3,000 to 5,000 an ounce right now, there wouldn't be as much of an imbalance in the world in a whole lot of things. The other thing is, and they always lose control of these things eventually, and they have been. If they weren't losing control, gold would still be $250 an ounce like it was back in the year 2000, and silver would be about $4 an ounce. So they are slowly losing control. But when they really lose control is going to be in the next big financial crisis. Will they be ready with digital currencies? I don't know. But thank God for the manipulation, because without it, we couldn't buy silver at these prices. And throughout history, what you see is the cure for low prices is low prices. If you have low prices, it's less economically viable to go out and create more of it. Whatever it is, it doesn't matter what it is. But mining gold and silver is a very expensive undertaking, and low prices prevent new exploration, new finds. And as you are well aware, Jeff, the amount of new discoveries out there is dwindled to this tiny little trickle, and there's no large discoveries. And so the cure for low prices is more low prices, and then you'll get high prices suddenly, and it'll happen with a crisis.
Yes, very good. Alex, you've had some good comments you've told me personally just about this manipulation topic. So what's your reaction to Braden's comments here?
Oh, I mean, one person's manipulation is another person's fiscal policy, right? I mean, at the end of the day, you're dealing with the largest forces on the planet today, right? You're dealing with huge central banks, the banks, the private banks that own them and control them and help set that policy, and the influence of nation states trying to get up on one another on imports and exports. And these are big forces, and big forces don't sort of just roll over and die, right? These are people who are going to fight to preserve what they've built today. And so, I think Mike's absolutely right. You have to look at it on the long term, right? You can't. Gold and silver are not trading vehicles. We're not trying to buy, some covered calls or some, we're not trying to sell puts on an earnings release here. This isn't something where we're trying to, earn on the next quarter, right? What we're trying to do is preserve people's purchasing power, their wealth, what they've worked so hard to accumulate over their lives, with a hedge to the dollar and to all of the risk that people in the Eurozone or in the US or in any of the economies who depend on our two major currencies, have effectively accumulated as their governments have tried harder and harder and harder to manipulate currency to do things it wasn't really meant to do. Right. So, we're in this really unique situation where I think, sure, there's some level of manipulation in the market or some level of policy fighting against higher gold prices, whether that comes through sort of a natural, self-preservation type of, policy within the U.S., or whether that comes from an active attack on certain commodities that are going to ultimately drive, their price is ultimately going to sort of, dictate and be the barometer by which people understand inflation is happening. So there's a little bit of passive and a little bit of active in there. But I think ultimately it's sort of, fingers in the hole on the dam, right? You can put a hole here, you can put a hole there, but ultimately we know where gold and silver are going. If you purchased gold 20 years ago, you're very, very happy. If you purchased gold in the 70s, you're very, very happy, right? The trick is own it, own precious metals, own them for the long run, and use them to decrease your reliance on policy and how much that affects your bank account. Because the more you are reliant on policy for the value of your bank account, the more they know they can just borrow from you to pay for today's programs, right? And you own gold and silver, you take away the politicians' powers to just borrow right out of your savings account.
That's great input, Alex. And Alex, thanks for joining us today. We really appreciate your input and update on the bullion industry here. So we're going to close this video out. Mike's going to read us the meme of the day here. But first, make sure you sign up for our free newsletter. No spam involved or anything like that at all. Because when we announce the InstaVault program and when the Heraeus bars can be purchased, those look pretty exciting. I'm going to get some of those myself. We will release that by email. And also, of course, if something happens to YouTube, we still will be able to stay in touch with you via our email subscription. So do that. And of course, Mike's book is available for free. You can download it. The link is below this video here. So Mike, what's our meme of the day today?
Well, this is awesome. I don't know what year this was taken, but it's prices if you pay in U.S. silver coins dated 1964 or earlier. And so this is a restaurant that's got prices, and a lot of people actually did this back in late 1970s, early 1980s. They had and all of the U.S. silver coinage went out of circulation very, very quickly. Gresham's law kicked in. But I just went to coinflation.com, and a silver dime today is $1.88 worth of silver at melt value. And so it's $18.80 is a dollar. You can get 10 hamburgers here. I think that this is actually a little bit under priced here, but I remember this very well. Hamburgers, when I first started going to McDonald's, hamburgers were 15 cents. And so I've lived long enough to see this, where we were going from gold and silver as money to fiat currency and the inflation it causes. So it's not really a meme. It's an observation, and it's great.
It is good. And the reason 1964 is because silver coins were made with 90% silver back then. So they have a high silver content. And I do remember, by the way, just real quick, back during the financial crisis, 2008, 2009, there were some gas stations in my hometown that would accept some junk silver coins for payment of gas. So that could happen again if things get rough. So
yeah, was it like 25 or 35 cents a gallon when gas was selling at $5 a gallon?
Yep, exactly.
Yeah, right. So this could be a restaurant menu priced in silver today. And it's interesting. I've been thinking that more people should do this.
Right. Very good.
Yeah.
Well, this has been great, you guys. Thanks so much for joining us, everyone. Alex, thank you. And Mike, I'll see you on the next video.
Okay. See you later, Jeff. See you later, Alex.
Thanks, guys.